todos. Bem-vindos à Masterclass sobre o tema Internet of Value, How Blockchain Technologies Leveraging Value Exchange. Uma vez mais, obrigado por estarem aqui. A todos aqueles que estiveram na última Masterclass com o David Ghiori há 2 dias atrás, um agradecimento especial e um orgulho grande por terem participado na outra Masterclass e por estarem hoje aqui também. Eu vou apresentar o programa e, portanto, para alguns de vós já teve a oportunidade de conhecer o programa, mas eu vou ser mais criativo e se calhar levantar até outros pontos de valor. Mas aproveitem também esta altura para colocar algumas perguntas que queiram no chat sobre o programa, de forma a que o nosso colega Gil possa ir respondendo. E, portanto, vamos arrancar com um overview sobre o programa novo FCT FinTech Innovation. Depois arrancamos com o nosso convidado especial para a nossa Masterclass de hoje. E depois temos uma sessão final de perguntas e respostas. Sejam perguntas e respostas relacionadas com a Masterclass, sejam relacionadas com o próprio programa nova FCT FinTech Innovation. O programa nova FCT FinTech Innovation tem essencialmente 4 grandes pilares de diferenciação. Um dos pilares de diferenciação está essencialmente relacionado com a estrutura de conteúdos. O que nós desenhamos foi uma estrutura de conteúdos que engloba a maioria dos verticais ou subverticais que estão relacionados com FinTech ou Financial Service Leverage by Technology, se quisermos, na perspectiva de ter uma componente letiva, uma componente académica, uma componente fundamental que vos consiga criar as condições para consolidar um conhecimento sério sobre os temas. E, na mesma sessão, apresentamos ou trazemos empresas e projetos, case studies, que são apresentados pelas pessoas que participaram nesses case studies, pessoas das organizações, das empresas, das startups, que identificaram um problema e conseguiram resolver esse problema através ou do novo produto, ou do novo procedimento, ou do novo negócio. E, portanto, este é um dos fatores diferenciadores. Outro fator diferenciador está essencialmente relacionado com, de alguma forma, o formato. Todos os participantes do programa podem assistir live, presencialmente, o que nós gostaríamos que assim fosse, ou à distância, nas aulas, através do Zoom, e participarão tanto na parte conceptual ou fundamental, como na parte dos respectivos case studies, com toda a expressão de poderem colocar as questões todas e a interatividade que é possível quando é remoto. Portanto, o programa é naquilo que nós denominamos como híbrido, porque permite que os alunos e os participantes possam estar presenciais, mas também possam estar à distância ou possam escolher, com a flexibilidade que têm, estas duas opções. Mais uma questão que para mim e que para nós é fundamental quando olhamos para o desenho de um programa destes, é que estes programas não se aplicam apenas às pessoas que estão nos serviços financeiros. Aplicam-se a pessoas que estão na área da tecnologia, pessoas que estão a fazer uma transição de carreira, pessoas que estão também, é verdade, nos serviços financeiros de uma forma lata e que gostariam de obter fundamentos, aprofundar ou até desenvolver uma ideia de negócio. E aí passamos para o 4º pilar deste programa, que é, no final de todo este processo de aprendizagem, os participantes são encorajados a desenvolver uma ideia de negócio, naquilo que denominamos um capstone. Essa ideia de negócio é acompanhada por uma equipa de mentores da FCT e por expertos do setor, para que permita com que possam desenvolver bastante bem o problema, identificar bem o problema, desenvolvê-lo bem e depois entrar num processo de ideação, mas toda a planóplia de um contexto de um business case que é apresentado num formato, um pitch deck no final, junto de um conjunto de pessoas que são VCs, académicos, profissionais da indústria, que vão dar o feedback sobre este projeto, que pode ser algo que nas nossas empresas nós ainda não tivemos a oportunidade de resolver, porque o tempo passa e às vezes esquecemos de arranjar tempo para resolver alguns problemas, seja uma ideia de negócio que já tinham na vossa mente, seja uma ideia de negócio que surge no âmbito do programa, e nós estaremos cá para vos ajudar a resolver, para além de os vossos colegas terem a oportunidade, com esta diversidade de conhecimento e de backgrounds, poderem chegar a um projeto que vai ser seguramente fantástico em cada um que vai poder apresentar. E quem chegar a essa fase tem um diploma da nova Faculdade de Ciência e Tecnologia e de Formação Executiva de FinTech Specialist, ou especialista em FinTech nas áreas que utilizou e que de alguma forma aproveitou para desenvolver esse capstone. Portanto, são estes 4 pilares fundamentais e de alguma forma diferenciadores deste programa. O programa tem 14 módulos, ou 13 módulos, mais a apresentação final, e o primeiro módulo é este aqui, e o primeiro módulo tem duas vertentes, se quisermos. Tem uma vertente inicial em que apresentamos o programa, a metodologia de aprendizagem que vamos utilizar e de conhecimento, quais são as ferramentas que vamos utilizar, quer seja quem está à distância, quer seja quem está presencial, como é que vamos comunicar, como é que vamos trabalhar depois o capstone, onde é que vão poder aceder às gravações de cada uma das sessões live, porque pode acontecer uma situação ou outra de não conseguirem estar, ou de quererem rever, para depois poderem aproveitar ainda mais a aprendizagem. Depois tem uma segunda parte, e essa segunda parte está diretamente relacionada com um alinhamento fundamental no programa, que é descrever as diferentes componentes da cadeia de valor dos serviços financeiros, para que estejamos todos alinhados nesse contexto, perceber quais são os alvos de disrupção da cadeia de valor dos serviços financeiros, quais são os modelos de negócio que estão a ser altamente atacados pelos novos entrantes, e como é que os incumbentes estão a desenvolver estratégias também os incumbentes a desenvolver estratégias para conseguir mitigar os riscos destes novos entrantes e aproveitar as oportunidades que a tecnologia associada aos serviços financeiros promove e propõe para a melhoria do negócio, para o desenvolvimento de novos produtos e novas formas de comunicar e novos canais. E depois arrancamos com os vários subverticais do FinTech. Arrancamos na segunda sessão com pagamentos, e pagamentos vamos ter o Anish Zucchi, que é assistente professor da Nova, e vai ser uma sessão em inglês, e vamos ter como o case study da CIVS, que vai ser apresentado pela Teresa Mesquita, que é CMO e Product Officer da Sociedade Interbancária de Serviços. Terceiro módulo, vamos ter blockchain, cripto e central bank digital currencies, ou aquilo que se denomina na Europa como euro digital, ou em outras geografias, aquilo que é a moeda digital emitida pelo governo, emitida pelos bancos centrais. E vamos ter o ANIS novamente, e vamos ter o case study da U-Trust, que é apresentado pelo Rodrigo Russell, que é o Chief Revenue Officer da organização. Depois teremos na quarta sessão InsurTech, e vamos ter o Gonçalo Graça Santos, que é o CEO da Via Direta, que nos vai apresentar todo o ecossistema da indústria dos seguros, e vamos ter o case study da Lobbies, apresentado pelo João Cardoso, que é co-founder e CEO da Lobbies. Depois teremos o vertical do Health, e vamos ter o David Giori. Para quem esteve na sessão de há 2 dias atrás, teve a oportunidade de conhecer o David, e todos nós obtivemos um feedback fantástico da primeira Masterclass, e portanto estamos muito entusiasmados também com o privilégio de termos o David, assim como todos os outros guest speakers que temos e pessoas que vão apresentar os seus case studies. E vamos ter como case study o case study da eToro, que é uma plataforma de social trading. Na sessão 6 vamos ter Alternative Lending, e que vai ser apresentada por mim, e vamos ter o Case Study da Raise com o José Rego a apresentar o caso. Sétima sessão, vamos ter User Experience e Digital Engagement, com o Vasco Antunes, e vamos ter o caso de estudo da Moie, que é apresentado pelo Ricardo Madeira, da Caixa de Crédito Agrícola Mútuo. Oitava sessão, Open Banking, e aqui no contexto do Open Banking vamos ter o David Ghiori, assim como Alternative Banking Players, são duas sessões, as sessões do David Ghiori são sessões totalmente remotas, portanto, nesses 3 dias que já apresentei há pouco e estou a apresentar agora, oitava e nona sessão, são sessões totalmente remotas. Nesse dia não estaremos presenciais. E Open Banking vamos ter o case study do Digital Banking Service apresentado pelo Vasco Oliveira, que é partner da empresa, e Alternative Banking Players vamos ter o caso do Universo Sonai. É um caso seguramente muito interessante também, quando percebemos que uma entidade que está fortemente enraizada e uma das maiores entidades do grande retalho em Portugal, seja no retalho retalho alimentar, seja no retalho de outras operações de consumo, até que ponto e como é que pode interagir neste contexto de ser um meio alternativo, ou um banking alternativo, ou um financial service alternativo, e um player francamente importante, como outros que irão aparecer em Portugal e noutras geografias. Mas este em especial, eu tenho uma curiosidade enorme em perceber como vai acontecer, e vai ser fantástico seguramente. Décima sessão vamos ter Regulation Technology, Compliance, já vamos ter o Martinho Lucas Pires, que é professor na Católica, e vamos ter o caso da Locker, apresentado pelo Ricardo Costa. Vai também ser um caso fantástico, considerando que aqui falamos de identidade digital, falamos de qual é a necessidade de fazer um processo de Know Your Customer, de conhecimento dos clientes, de apuramento da solvabilidade, de rastro e certificação da pessoa. Vai ser muito interessante também. Social Responsibility e ESG, vamos ter o Paulo Ferreira da Costa, que é board member do Credit Cash Senegal. Vai ser também muito interessante, porque o Paulo Ferreira da Costa tem uma experiência enorme de mercados como o mercado africano, que é muito grande, onde tem uma experiência enorme naquilo que é a estrutura de pagamentos e, simultaneamente, como é que se pode utilizar as ferramentas da ESG e qual é o papel da responsabilidade social em determinados setores, enquadrado no contexto dos serviços financeiros. E depois vamos ter o Case Study Student Finance, apresentado pela Marta Palmeira. 12º teremos Big Data e Machine Learning, pela professora da Nova, Paula Amaral, e teremos o Case Study da Closer, apresentado pelo João Cruz. Por último, no que respeita a módulos, vamos ter Automation e RPA, apresentado pelo Bruno Valente Costa, que está aqui connosco hoje, e vai ser o caso da Doc Digitizer, que está a fazer um trabalho extraordinário em Portugal e fora de Portugal, naquilo que é a utilização de machine learning e inteligência artificial para transformar dados não estruturados em dados estruturados e criar as condições para automatizar e ganhar eficiência junto às organizações, sejam elas os serviços financeiros, sejam aquelas que fazem parte do ecossistema de serviços financeiros. E depois chegamos a uma parte fantástica, que é aquela que nós também identificamos como o corolário deste programa, que é a realização do Capstone. No Capstone, nós vamos ajudar e entregar um conjunto de ferramentas e framework para que, em grupo, os participantes do programa possam fazer o processo de identificação do problema, processo de ideação, construir o seu pitch deck, identificar as variáveis, perceber addressable market, perceber dimensões, perceber impactos. Vão ter sessões de mentoria comigo, com a Anish e com outros experts da área da indústria ou das ferramentas que vão estar utilizadas verticais, que é apresentado numa sessão de pitch session, onde vão apresentar o vosso pitch deck junto de um conjunto de pessoas que vos vão dar um feedback positivo seguramente e de alguns ajustamentos, para que, quem sabe, saiam daqui projetos de negócio, ideias, resolução de problemas, que é para isso que é fundamental programas como este, porque a aprendizagem só ocorre quando nós fazemos, quando nós praticamos. E no fim, nesta sessão, vamos entregar os diplomas de especialista em FinTech, e vai ser um momento muito interessante para todos podermos também fazer algum networking e simultaneamente festejarmos, chegarmos a este momento ao longo de uma jornada. E por falar em jornada, a jornada começa dia 11 de outubro, com a primeira sessão, vai-se prolongar ao longo de 7 semanas, sendo que na última semana depois fazemos um intervalo de tempo entre o dia 29 de novembro e o dia 12 de janeiro do ano seguinte, e neste momento de intervalo de tempo é quando vamos trabalhar convosco nas sessões de mentoria, ajudar-vos no processo de criação da vossa ideia de negócio ou resolução de um problema, preparar-vos também no processo de apresentação do próprio pitch deck, dar-vos alguns exemplos do posicionamento, da posição vocal, da forma como vão enaltecer os pontos e os benefícios, os pontos positivos do vosso projeto de negócio, para uma sessão que vai ser uma sessão fantástica, onde vamos ver-os, observar e ver e ter o privilégio de todos vermos os vossos pitch deck, darmos o nosso feedback e festejarmos, chegarmos a este momento, também com a entrega dos diplomas de participação da nova Faculdade de Ciência e Tecnologia, Formação Executiva, e os diplomas de especialistas em FinTech. Esta é a equipa de coordenação e, portanto, tudo aquilo que precisarem de saber, não sei se já tiveram a oportunidade de conhecer o programa, se não, também é uma boa altura para colocarem algumas perguntas, se quiserem, no chat. Nós vamos respondendo. O Gil é quem está a moderar o chat e, portanto, vai responder algumas questões que possam colocar, mas essencialmente nós estamos aqui hoje para ouvir o nosso orador convidado, que é o Anish, que nos vai falar sobre a Internet of Value e como é que blockchain, a tecnologia blockchain, está a alavancar esta partilha de valor. Anish é professor associado da Faculdade de Ciência e Tecnologia da Nova, é um researcher em várias áreas, digital platforms, digital business models, blockchains, cryptocurrencies, crypto-economic systems, tem um background extenso e de participação em vários eventos, já publicou várias publicações, mais de 2 dezenas ou quase 3 dezenas de publicações relativas a estes temas, e seguramente que vamos ter uma sessão fantástica com a Anish. E, portanto, eu vou passar agora para inglês. O Anish, embora esteja há vários anos em Portugal, percebe bem português, mas ainda não está versado na língua portuguesa, e, portanto, vai fazer a sua apresentação em inglês. Anish, it's a pleasure to have you here. We are
Thank you so much.
Very excited to have you here. Let's move on to your presentation.
Thank you. So let me just start by sharing my screen here.
Perfect.
Perfect. You can hear me clearly?
Perfect.
Okay, great. So first of all, thank you for being here and present. And today, over the next 30 to 40 minutes, I'm going to be giving you a snapshot of one of the areas of research that is very much dear to me and very exciting for me. So let's start the journey. And instead of looking at, just one second, I have an issue with, yeah. So instead of looking in the future, I thought to start this presentation by looking at the past. And for someone of my age, I have been fortunate to have this device, which is on the left side, which we used to call a camera. And unless you are really young, most of you probably remember it. And I have a lot of memories attached to it. And this used to be a wonderful device. We used to go and buy these reels and take 36 images and then give it to the local friendly local store to get it processed, have this waiting time of a couple of days before it gets done. And then the whole family was very excited. We could show it off. And then somehow things changed. There was a new innovation, there was a digitization that was happening, and the digital camera was slowly creeping into the market. Initially, it was very expensive. The photographs were kind of grainy, but more than ever, uh, we didn't have a computer at home. It was prohibitively expensive, so it completely didn't make sense to go and buy one of these devices. And that's what the executives at Kodak saw when they saw this technology coming. They had a completely well-running, well-oiled business model generating lots of revenue, and they could not imagine why this new device is going to eat them up completely. And that's what disruptive innovation is, that when you are inside a particular ecosystem, it's very hard for you to visualize what are the next steps and stages that are coming. Because it was not only about the camera, the digital camera, that would, of course, make the cost, the incremental cost of taking a picture down to zero, which was an extremely compelling value proposition, but it required computers to be cheap enough and abundant enough for everyone to have it. But the concept of digital cameras was not just ending there, because the next innovations would have been smartphones, and then these digital cameras would eventually get obsolete, and these smartphones would come and provide everyone with the ability to have a camera with them at all times, share them on social media, and allow developers to create app ecosystems where these images could be used for multiple uses. So, and then what would happen next? These cameras would actually get put into into surveillance cameras, drones, connected with image processing algorithms, and so on and so forth. The technology would go on. And if the staff and members at Kodak could visualize all these different stages, they probably would have been extremely scared. This is what disruptive innovation is, and this is how I see today blockchain technology. Blockchain technology basically changes something extremely fundamental, and that is the fact that our ecosystems are centralized. Just give me a second. I have having an issue with Zoom here. Are you seeing a floating bar over here on your screen, Ricardo? No? Okay, then it's fine, because the bar is appearing. I thought it was disturbing there. So let's go back to this. So as the digitization process has happened, we have always had to rely on centralized networks of basically doing everything, whether it's finance, whether it's accounting. We need banks to take care of our money, to transfer it. Similarly, we need centralized institutions, platforms to run our, to book our hotels, to do stock trading, and so on. And then this idea came up what if we could decentralize it? What if we could change the very fundamentals where the ledger that is often stored at a central location is transferred in a decentralized way, meaning you do not need to rely on centralized permissioned authorities for conducting your business. Now, this simple concept has enormous implications for a variety of use cases, some of which we will explore. So this is how the blockchain actually started, contrary to many other technologies, by the Cyberpunk movement. Now, what was the Cyberpunk movement? It was basically a group who wanted to rebel against public and government institutions and wanted to have this challenge that we create our own currency. And that's how Bitcoin, which was the white paper, was anonymously created in 2008. And in 2010, Bitcoin started. And since then, it started this whole the ball started rolling towards one after another innovation of different blockchains. And what is interesting is all of them are open source collaborative networks. That means you are having complete self-sovereignty and permissionless, contrary to a lot of ecosystems that exist today that are controlled by either centralized entities or governments. Now, of course, this puts all of these public blockchains in a sense of a regulatory gray zone, but it also means that it's an innovation sandbox where a 20-year-old young computer programmer sitting in his basement could actually probably program the next generation of a new financial ecosystem. This has the possibility to threaten incumbents, but at the same time, it has the possibility to bring in so much of innovation, which is why the whole public blockchain space is very interesting. Now, at the same time, private blockchains, which are built by legacy systems, they are built by incumbents and over legacy systems, are also emerging at the same time. And they are following a lot of the innovation that has already been done in the public domain. And Hyperledger by IBM is one of the protocols there. We have heard a lot about central bank digital currencies. And if they do come on private blockchains, that would be another example. However, there is a challenge here that although we have heard a lot about private blockchains being built, the reality is that sometimes it's very hard for many cases to justify their existence because in many cases, they are glorified centralized databases where you would really need to justify why would you want to go to this complexity of creating a distributed ledger when you have enough trust. Now, there are certain use cases where it makes sense, but this is something that is an area of very active research. Now, when we come to talk about blockchains, the fundamentals of blockchains start with tokens. Now, what are tokens? Tokens are digital identifiers that can be used to represent anything. And the whole concept of blockchains start with creating tokens where these tokens can represent stores of values or utilities or socials. Let's go about it one by one, but there are two fundamental types of tokens. One is fungible tokens, that is tokens that are of a certain supply that are interchangeable. And there is the non-fungible tokens where the tokens are unique, either one or a very few, that represent certain specific things like licensing rights or intellectual property. So with the foundation of these tokens, a lot of variety of use cases have been developed. And let's look at some of them. Now, the first use case of tokens, of course, is using them as a store of value. Now, this seems extremely counterintuitive because why would a token that is created that's without any sort of backing of anything be used as a store of value by anyone? And this is how Bitcoin was first formed. But if we look at the logarithmic or price chart of Bitcoin, we can see an exponential growth with a lot of volatility. Is it a tulip mania that many people claim to it? But with each cycle, Bitcoin tends to have more and more converts that believe in a narrative around Bitcoin. And that's why the Bitcoin price keeps going up. What is it? This is something that we will explore in the later part of this session. But Bitcoin is not the only use case of store of value. There is another major use case of a store of value of cryptos, and that is stablecoin. So stablecoins are basically tokens that are backed by dollar or dollar equivalents, either bonds or other treasury assets. And there are many companies such as Circle or Tether or the Binance Paxos, that are actually issuing these stable coins, providing full one-to-one backing. The interesting thing about stable coins is that they can run on payment rails and by its very nature be global. And there is a huge demand for dollars in a global distributed ledger by people across the world. And that's why stable coins continue to grow in size and scale. Now, another interesting aspect is because of these stable coins that they are on a on a public blockchain, you can have anyone developing codes or financial applications using these stable coins, some of which we will discuss, and such as lending protocols or other financial products, which makes them extremely compelling. Another use case of the fact that we can have stable coins is that this can be used for non-custodial micropayments. Now, imagine a scenario where you have micropayments for different energy devices, that energy production and energy usage in a scenario where we need to have that kind of a value exchange, or within gaming environments. Today, if we want to build such systems on legacy systems, we need to have a custodian and have that one custodian deal with holding the value of the entire ecosystem. That's a lot of trust involved, and this is where this can be an interesting use case. But there are other interesting use cases of cryptos, and that's what emerged, is that what about crowdfunding for projects? Now, crowdfunding is not something new. Platforms like Kickstarters have had crowdfunding for a very long time, but the concept arose that if any organization or company or a startup can create tokens, why not issue these tokens in lieu of the crowdfunding that they receive? And let the market decide what would be the price of these tokens. And if there are people ready to speculate or bet on it, why not have this market? And that was the basis of entire beginning of cryptocurrencies. And we saw a lot of cryptocurrencies go to zero. However, the concept is still very attractive. And these cryptos, the logos of which include Polygon, Avalanche, Solana, etc., these are all different layer one blockchains who have been crowdfunded. And the idea being that these tokens eventually have to have some sort of a utility in order to have some sort of a value. Now, of course, there's a lot of regulatory uncertainty whether these would be considered securities or utilities, but there's a lot of innovation around tokenomics. In our course, we will be discussing further on some of the tokenomics for these tokens that have been experimented and what could be the future of them. The next interesting aspect of blockchains is their ability to create smart contracts. Now, what is smart contracts? This is also known as code is law. Now, when we talk about law, there are two types of laws. There are laws of physics and there are laws of legal systems. The big difference between them is laws of legal systems are such that we are expected to follow, and if we don't, there is some sort of a punitive measure that we might face. But the laws of physics are laws that you cannot avoid because they are the basis of the physics of the planet that we live in. Similarly, smart contracts are laws similar to the laws of physics. The moment you start using a blockchain, these smart contracts are encoded within the blockchain that is impossible to change once they are implemented. This means that there is complete certainty amongst participants about how these codes would function. Examples of smart contracts include policies about how a particular token supply would expand or not expand, how much supply would it be. It could be used for non-custodial locked assets within ecosystems where you can lock in a certain collateral under the promise of certain conditions happening, and those assets would be released only when those conditions are fulfilled. Now, it opens up the possibility for programmers and developers to use their imagination and skill to create a lot of different financial applications. We do talk about, in traditional fintech, about creating open APIs and PSD2s, value chains, so that we can open up the banking sector. But because blockchain systems are designed and based on smart contracts, this is a completely open ecosystem where developers can experiment from scratch. And there have been some very interesting experiments in this space. Some examples include what we know as decentralized finance. Now, Aave produces a lending platform where you can have suppliers of assets lend to borrowers, and it's akin to creating a money market ecosystem. But the interesting thing is that this is completely encoded within a smart contract. There is no company running it, and there is no it's not a permission system. This is a software in the cloud that works like a financial institution. There are, of course, different incentive mechanisms, which means borrowers and suppliers can lend, and there is a market-driven, the demand and supply, basically, the market forces decide on the yield, and it's very different to how our banking systems run today. There are also centralized platforms based on crypto that promise yield. We have had also infamous examples like Celsius fiasco for those of you who have been following. But Nexo is an example of a EU-regulated entity that claims to be audited and has been running quite successfully. Now, smart contracts have been used to create decentralized exchanges where you can exchange one asset for another without using any centralized company or organization. And there are liquidity providers that can earn a yield by providing liquidity on this. Now, I'm not elaborating on the mechanisms of this because it's beyond the scope of the time that I have, but it's just to give you a taste of the plethora of innovation that's happening in this space. Social tokens. What about community builders? If they can create a token and monetize those tokens, Rally is one such platform that allows different community builders, artists, musicians to create tokens where their fans can actually get benefits out of those tokens. And it is the artists who can decide what would be the incentive structure built around the token. Chiliz is another platform that allows football clubs to tokenize and have fans have certain rewards or even voting rights based on it. And considering the fact that these influencers are actually the new prophets and the new age religions, the possibility that these social tokens could actually use a variety of decentralized finance functions opens up the possibility for a world of innovation over here. Now, what about these tokens? Can they be issued as securities? Now, this is a big regulatory gray zone because what is a security? Now, sometimes a security and a utility token, there can be a lot of overlaps in terms of definitions. And many of the tokens provide rewards based on the deal flows or based on the cash flows of the business. And those tokens would clearly be securities. But then these securities are on the blockchain and are global in nature and can be traded and exchanged at any crypto platform. Maybe securities laws need to change, and the Securities Commission of the United States there's a lot of discussion about regulatory clearances around it, but there are many questions around it. How would securities be actually regulated? Because of the fact that they are global in nature, which jurisdiction would do it? Or would there be an international partnership or international agreement on them? The bigger question is, how would investor protection be protected? How would proper disclosures be ensured? Would it be through traditional mechanisms, government agencies, or would it be through new market players that would basically call for transparency? But the second more interesting thing is the fact that cryptos and blockchains provide so much of value addition as compared to the traditional way stocks are traded in traditional stock exchanges, is that it also opens up the possibilities for traditional securities and stocks to be tokenized and be traded on blockchains and crypto platforms. This is an area that would be very interesting to see. Well, other things can be tokenized. For instance, real estate. Solid Block is a US-based company that has been doing that quite successfully, tokenizing real estate and selling those tokens with part ownership of property, and also where the token owners can generate the income which is produced by renting these real estates or apartments or hotels. Now we come into the domain of non-fungible tokens. Now these non-fungible tokens could represent any aspect, and there is this whole movement that is known as the Web3 movement. Now Web3 movement is about self-sovereignty. Platforms like Facebook are actually large companies, and they monetize and control all of the virtual space that generates value. But the Web3 movement is about new platforms such as metaverses, games, and other social media environments, where the creators of content, creators of digital spaces, creators of digital arts, whether it's in a gaming environment or the metaverse environment, they actually can own the assets that they have in the metaverse, and the metaverse would actually be a neutral space. This is based on the philosophy of how the entire blockchain ecospace, the public blockchain ecospace, has been built based on open source philosophies. So this is where non-fungible tokens could have a big potential, but non-fungible tokens could also be used for intellectual properties and IP and creating value out of them. For instance, IP for a certain drug discovery could be tokenized and be sold, where the crowd-funded investors could actually hold on to could actually part own the IP, which could be a big change in the way pharma industry works today. So the blockchain value proposition pyramid contains of many different levels, and an infinite number of use cases could eventually be derived on it. It starts from the basic aspect of immutability and decentralized storage, which could be used to store things like supply chain data, certificates. It could be used for membership management, identities, voting, and so on. But then as we go to the second level, we can apply a lot of analytics and automation to that, and that coupled with the fact that you can store tokens and create new forms of crypto economic models. But at the apex of it lies the concept of decentralized governance. That is, if you can decentralize tokens and assets and value, can you decentralize governance and decision making? Most of these blockchain platforms are built by decentralized communities, created by certain initiators, but eventually as the community gets decentralized, you have a decentralized way of decision making. This is, of course, at its infancy, and as it explores, this is also a very interesting facet of blockchain that will evolve. Now, I want to spend a little time discussing on the first concept that I spoke about, that why is it that Bitcoin, which is a store of value that's backed by nothing, continues to gain wide adoption. And this basically challenges us to rethink about our entire financial ecosystem and our concepts of money as we know it. It's very hard when we are in an ecosystem to try to understand, to try to introspect about the flaws and faults of it. But this is a very interesting exercise, and of course there are no conclusions that can be drawn on it. But the principles of sound money are based on the following: acceptability, which of course grows with generating critical mass; accessibility, which means can the money be easily accessed, or are there many gatekeepers which makes accessing difficult? Portability means can you easily carry it around? Transferability, can you transfer it without actually physically being present? Fungibility, which means can it be divided? Can it be exchanged? Divisibility and fungibility. And then transparency. Can you know how much of the units exist? Is it transparent or is it hidden? And more often than all, scarcity, because if it is not scarce, it cannot hold its value. Now, judging by these principles, it's hard to say that we have a money system or ever had a money system that fulfilled all of these attributes. While we do tend to think that the money is the domain of the sovereign, it has actually not been the case in most of history, because many kingdoms have come and gone, and many tokens or coins issued by kings and kingdoms have actually lost their value. The only thing that actually maintained its value throughout time, which is silver and gold. And if we ignore the last century, that has what has been traditionally been considered money. In fact, the entirety of the British Empire for 200 years, the British pound was completely a gold-backed pound, and anyone could actually go to a bank and exchange their money for gold, and for very good reasons, because anything that you can create in large supply will eventually lose its value. However, gold itself has a lot of problems. Gold is not portable. Gold is not easily transferable. And ultimately, as communication goes faster than movement of goods and people, you needed to have a system where you could put the gold and have some sort of a IOU that you could easily exchange. And that's what Bank of England was doing. However, when the First and the Second World War happened, governments did a lot of debt financing. And that's when a lot of debt started being created, where you had a lot more money than there was gold in the vaults. And that's why the whole history is very interesting of how slowly over this century, we have gone off the gold-backed reserves. And it completely ended. The Bretton Woods Agreement that was after the Second World War still maintained some sort of a gold-backed reserve, although partially, which ended in 1972. And this is where the proponents of Bitcoin have this very interesting narrative that Bitcoin, because it has this maximum supply, it is a permissionless and open protocol with providing transparency, very secure and decentralized, and has this increased acceptance. Could it be, if not an alternative, but a parallel money system built around it? Now, it's a very interesting question. It is often still more and more academics are still exploring their idea. It seems outlandish at one way, but on other ways. So this is a debate that's very interesting going on. I would not be 100% one way or the other, but the point today is I would like to put some points forward with this. And of course, this again goes back to the whole discussion between different schools of economics. Austrian economics, which believes in a hard money ecosystem, while Keynesian economics, which believes in a constantly inflating money supply system. And there are lots of discussions, which of course is beyond the scope of this talk today. But I'd just like to more or less move towards a conclusion of this, or presenting some facts. One fact is true, is that we are in a money supply system that is very extremely hard to count. It's extremely hard to count because there are different levels of money, M0, M1, M2, M3. The entire financial ecosystem is based on the central banks creating base money, and then banks having the ability to create loans and deposits. Every time a new loan is taken, basically they can create an asset and a liability at the same time. And there is, well, I wouldn't say limitless, but it's the ability of banks to do that is extremely large, as long as they maintain certain capital constraints. They can basically create a lot of free money. And this is what drives our ecosystem, and this is what drives the Keynesian economics today. Of course, the boundary of that, or the limitation on that, is that the central bank uses this lever that anytime the inflation goes above a certain amount, they increase the interest rates so as to discourage more borrowing in a way to cool off the economy. But the fact that we have a completely inflating money supply system means that if you look at by the logic of Austrian economics, that we should live in an inflationary world. However, on the other hand, we have not seen a lot of inflation, excepting in this year, and there are many interesting narratives around that. But we can clearly see we have an extremely large debt, a growing debt. It includes public debt and private debt, which means the money supply system is constantly diluted. Now, one of the narratives behind why we don't see an exorbitant price inflation is because there are a lot of deflationary factors that are also happening at the same time. We have had globalization, which means that there is intense competition amongst countries. A lot of manufacturing has been shipped on to China, which of course creates a lot of currency inflation to try to keep its pricing low. There is this free market competition, which means, and technology and automation, that means that there is immense productivity gains. And the fact that we are choosing the cheapest products means that there is a lot of deflationary pressures that on the pricing. In the Keynesian economics world, deflation is seen as something bad. But in the Austrian economics world, deflation, which is derived out of increased productivity, can be something beneficial for consumers. This, of course, is balanced, on the other hand, by this humongous amount of money supply increase, which is through constant debt creation, which also means that as quantitative easing has been happening, there is a lot more debt with governments, and governments can keep on getting bigger and bigger and bigger in size. Even there have been proponents of the MMT theory, which basically are more about expanding the money supply to an extremely large extent. So this debate is going on, and those who one of the casualties of this is although sometimes prices of goods and services do not inflate, the prices of assets have kept on inflating, and house has become an asset where people need to constantly go and use assets like house as their bank deposits, which of course means it gets more and more difficult for young people to go and buy housing. So there are a lot of financial implications around it. Of course, this is a topic of very big discussion, but what's happening in the other parts of the world is that inflation has been happening at an enormous rate. And there are many countries where their value of their money has literally gone to zero: Zimbabwe, Syria, Iran, Sudan, Turkey, Sri Lanka. The examples go on and on. And one of the interesting research that I did was that I tried to look at their broad money growth, and I found that there was an extremely strong correlation on the broad money growth and the inflation there. So you can see graphs of Venezuela, Turkey, both countries with very extreme inflation, whereas United States, which has tried to, at least on a relative way, have a far more reasonable 5 to 7% broad money growth. Now the other aspect is why would people look for permissionless systems? This was actually this week where the Lebanese banks closed the money supply to the depositors, and there were a lot of violent incidents happening. And for us in Europe, we do remember that it was not too far ago that when the Bank of Cyprus got bankrupt, depositors, anyone having above 100,000 euro had to lose their deposits out there. So it's not like the traditional permission world. Everything is smooth, and which is of course another narrative which makes Bitcoin more interesting. Another aspect is what happened was when there were these truckers' protests in Canada. Anyone funding these protests or anyone providing funds to them had their bank accounts frozen. And all of these narratives actually make people look for non-permissioned alternatives. And then there is this whole aspect of geopolitics. We like to imagine that we live in a very civilized world and regulated world, but that's only within the boundaries of our nations. But at the international level, the world is still very savage, where countries look for their interests and try to block each other. But there is a movement amongst people all over the world to actually trade with each other, be more connected. So there are these two forces at play. The dollar is losing its dominance as a global reserve asset. And what would be this neutral currency or a neutral system where the world can actually agree to have trade? These are questions which are not having clear answers. And that is where stable coins and bitcoins are having a very strong narrative. There are people in countries like Zimbabwe, in many places in Africa, that really require stable coins because they would rather put their money in a US dollar pegged asset rather than their local currencies. And this trend is for sure growing to grow. And the US dollar wants to maintain its hegemony, its adoption. El Salvador was an interesting example which adopted Bitcoin. This is an experiment with a lot of mixed results out there, which we are carefully observing. And in the middle of all of this comes this whole narrative of the central bank digital currency. And I see two big motivations there. On one hand, the US dollar wants to maintain its adoption and global use, and it has this big opportunity that either to allow stable coins to emerge or allow financial institutions to keep using those developing stable coins, which are backed by dollars. Would CBDC take that shape, or would CBDC take the shape of a Chinese-based system where it's part of the M0 monetary supply? And this can allow the central bank to provide incentives to people, like money airdrops or helicopter money, which has time lapse, which they can spend to stimulate the economy. Now, of course, this is a big area. We will not go further into it, but what is interesting is that there are many narratives here. And as you can see, I overstepped my time because although I tried to condense, but the narratives are so many that I could not condense them within a half an hour. In our main sessions during the course, we are going to, of course, explore them in more details. And of course, if you do plan to take up the course and plan to do a capstone on the topic of blockchain and crypto, there are very interesting use cases that we can develop. So with this, I thank you for your patience, and I'm open to any questions that you may have.
Thanks a lot for your presentation. Indeed, I believe that you can hear me well. Yes?
Yeah. Yes, I can.
Thanks a lot. Indeed, you were beyond further on the subject, which is quite interesting, because there's a world behind this decentralized ecosystem that we are, with the network effects of the world, creating around it, and mostly when we are looking to a world that is creating narrow borders, mostly because of everything that is happening in the last years, mostly in the last 1 year and a half, and also with COVID. Everybody's trying to close themselves on the borders, trying to be auto-sufficient if the case. But at the same time, we have that layer of people which want at the same time to be borderless and to create transactions when they are somehow constrained by the time. And mostly there's one of two things, that we have some questions here, and there's one of the things which from my point of view was very, very, very important to touch here. CBDCs versus stablecoins. It's a concept that we will see in the future how the things will merge. It's quite important that and Anish will touch this. Imagine in 45 minutes he was trying to condense this in this time. Imagine what will be in 1 hour and 45. It will be amazing, I can tell you, in the program. But the relation between the versus security versus utility, everything which is related to trade finance, for example, with a smart contract which can be automated, fractional ownership, which is great because decades ago we cannot when we were buying a horse, we're buying a whole horse. Now we can buy parts of the horse and we can have a yield or gain money with this fractional horse. And everything which is related to scarcity, and you touch all the points regarding to the money supply and what we are heading, because indeed all of us, I believe, and this is something that we are going to touch a lot on the program, which is we are used to have our assets to gain value. But the question is, each time the assets are gaining value, we are creating more money because we are lending it. Creating and lending is money. It's not only the notes we have on the coins, it's creating money. And this is unsustainable, the money that we have created so far. And we need to do a reset here. And I believe that one of these days, I don't know when, but we have to reset the debts and start from zero. But okay, let's go to the questions. The first question is the one related to this. There are, and the question is from Dinesh. Dinesh, thank you a lot for the question. And the question is related to this. There are NFTs or business model related to sports clubs like FC Sport and others. Do you have any insight or information or your knowledge to have applications of tokens related to tourism and mostly related to scuba diving or in a global way, in the globalized world, meaning people which are somehow funding and at the same time creating utility on this kind of sports and tourism?
I could perhaps try to clarify a little further the question.
Please.
Because this whole idea. Hello again. Hi, everyone. So yeah, the thing is like the social tokens. I'm really interested in the scuba diving global market for underwater tourism, which is partially related to other kinds of more aeronautical and costlier tourisms. And a lot of people look at it and say, oh, it's impossible. And yet I noticed that in the social tokens, there's some people, I heard on the radio, they travel to India, to Japan, and they on Facebook, they tell their stories, they have sponsors, some kind of social feedback. So, you know, I found this little island in the middle of nowhere. Oh my God. And there's some value to it. And somehow I've noticed that some people travel around the world like that. And so I think somehow it already exists, not necessarily in the shape of a social token per se, with an app just for that, but apparently there's and this might allow to open up things that are beyond the reach of a normal tourist that is dying to go a little somewhere else. So maybe I hope I clarified the question.
So a very good question, and I think this is one of the keys that we are all exploring. That which are the sectors that the concept of the social token is going to move to. But let's look at the main purpose of that, and the main objective of creating a token, or especially a social token, is to provide ways to monetize for monetization for something that would traditionally be hard for them to monetize. For example, if you are an artist and you have created a new music, how can you get your fans to invest on your music or art and upfront receive payment so that they can also be part of the value that is created. Now, of course, this can also be applied to tourism. That suppose there's a huge potential for a new tourism resort, or maybe this island that you're talking about. And right now, it doesn't have many tourists coming because it needs infrastructure development to take place. Now, can this island, or maybe can the government of this island, or maybe can some company or organization or NGO or a society issue a token where investors would be ready to invest upfront, because this token would fund some sort of an infrastructure development, maybe development of new hotels, maybe development of new, and when the tourism actually starts developing, this value can be given back to the initial investors. Now, it's this very similar thing as to what happens in an IPO for a company, but we are now taking that concept and applying it to areas which are out of this traditional securities market. To my knowledge, I haven't seen it being implemented because the whole concept is so new. Bitcoin has these 4-year bull market cycles, and every time the bull market comes in, we see a lot of new innovation. The concept of social tokens and even platforms like Rally and all, it's just a very new phenomena, and now it's being used by artists, and it's only during these bear markets when the crypto prices are down, that's when a lot of innovation goes in. And that's what is happening, that by the time these Bitcoin, if the 4-year cycles of Bitcoin actually continue, that's when we begin to hear a lot of hype about certain projects, and a lot of old projects which were pure hype and no substance, they die out. A lot of building is going on in the whole Bitcoin ecosystem. There's a lot of building going on, and then there are many applications like where this is going on. I personally have not done a thorough research on what are the new use cases in tourism which are getting built, but I think this would be very interesting area to explore. If you're interested in this would be a very interesting topic.
Thank you, Anish. I have another question which is related to how we can use blockchain to somehow to create trade finance more efficient. I know that there are several examples from banks which are experimenting and also applying, because indeed what we have on the trade finance, we have different stakeholders with different kind of activities they have to perform in order to, and when this is also attached with the Internet of Things, which somehow brings a layer of verification, of validation on the blockchain, can automate all the process of trade finance. Can you give me a feedback on that?
Yeah, so there are very interesting experiences in this. I was looking at a case study when an importer in Malaysia, he wanted to buy a product from Thailand, and these payments have been made using crypto, but then there is this whole entire value chain of tracking of the supply chains and tracking of the supply lines. So I'm not aware if there is a startup which has solved exactly this problem, but there is a very interesting startup called VeChain that is developing an open ledger for all kinds of supply chain management. And it has been used not in the trade finance area, but for the carbon credit management area, and for in general supply chain management ecosystems. So I think this could be a very interesting platform to develop more solutions for trade finance.
Okay, let's go to a final question, because we are reaching above our time, and we want to have try to fit on the time. The last question is mostly regarding the future. How you see the future of money, and how you see the way that people will transact, and also have the value on transaction in the future?
Very interesting question. Of course, I can only share my perspective because no one can predict the future. The way I am seeing it is that there is an incessant desire amongst populations to globalize, and that's what the internet did. Internet broke down the borders. So social media meant, irrespective of whether United States wants to put sanctions on Russia or not, or Iran, or vice versa, people will communicate across different regions. But they could not exchange value. So this is one of, as I said, this is the whole narrative behind why you will have public ledgers and cryptocurrencies and stable coins getting there. But I don't think that it's that Bitcoin or stable coins is going to come and overtake the traditional finance. It's not going to happen right away. So there is going to be a sort of a coexistence. The United States SEC has already declared that Bitcoin is a commodity. It's not a security, it's a commodity, which means from a regulatory point of view, Bitcoin is already sort of has regulatory blessings from the United States. At the same time, they are very clear that they want to move ahead with stable coins in a big way, because they have this huge opportunity. If they do not allow stable coins to be traded globally and be used globally for finance, you are probably going to have another competitor emerge, which is what the Americans do not want. But at the same time, if you want, if United States wants the US dollar-based stable coins to be used in a big way in global finance, they cannot use sanctions as a weapon or abuse sanctions as a weapon, because that then by very definition you are leaving out half of the world from using your currency, and that maybe something else will come to fill this gap. So this is very interesting. On the second hand, when it comes to within the national boundaries. So every country is talking about building its own CBDCs. If these CBDCs get built, it's very interesting to see, will it be used only to give helicopter money with a lot of conditions and terms, simply to stimulate the economy? If that is the case, it won't be the de facto main form of payment. So within national borders, for instance, I do not see a clear need for, if I want to do euro-based transactions, I might use a blockchain-based system or a euro-pegged stablecoin system, but it's not a compelling reason, because even with our open banking APIs and so on, we can use apps or fintech companies integrated with environments such as gaming or energy trade, where you can do micropayments. I think the big deal happens is that if you want to globalize and have that globalization taking place, and that's where stable coins are going to come. And I think eventually it's going to lead to a lot of regulatory rethinking in the different arms of the government. Maybe they realize that we have to, in order to remain competitive, maybe we have to change a little the way the amount of currency inflation we do, or maybe change in the way in terms of how closed we want to make our financial ecosystem, because there is going to be an open competition between the free crypto world and the walled gardens of regulated environments. And this is a very, very interesting dynamic to play. But for us as users, we will get more choice, and we will get more say in terms of making our governments listen more in terms of having more sound economic policies. And I think it's a win-win for us as citizens and as users of the financial ecosystem.
Thank you, Anish. Indeed, I agree, and I believe that all of us agree with you. Obrigado a todos, uma vez mais, por estarem connosco. Esta foi a segunda sessão. Não temos planeado mais nenhuma masterclass até ao início do programa FinTech Innovation. Convidamos a todos para conhecerem melhor o programa, quem ainda não conhece, e vão ver que isto foi um pouco daquilo que nós vamos discutir de uma forma conceptual, fundamental, mas também livre, de podermos discutir as nossas opiniões e de... portanto, nós não estamos lá somente para ouvir, e nós, participantes, nós estamos para discutir, para levantar as ideias, e depois é esse levantamento de ideias que vai fazer com que seja muito rico o capstone, ou o conceito de ideia de negócio, ou de resolução de um problema, ou até de uma ideia conceptual que se calhar mais tarde leva a um livro. A lógica aqui é que nós consigamos desconstruir, repensar, pensar de forma crítica, ter os fundamentos para nos ajudar a pensar nessa forma crítica, os frameworks que nos ajudem nisso, e é isso que o programa FinTech Innovation vai trazer, pela sua capacidade diferenciadora, pela equipa de pessoas que está a coordenar, pela equipa fantástica de professores que temos e pela equipa extraordinária de case studies e de pessoas que vão apresentar os case studies. Portanto, eu digo-vos, só prometo. Portanto, obrigado a todos, uma vez mais, por estarem aqui hoje. Foi um prazer rever-vos, alguns, outros conhecê-los pela primeira vez, e espero ver-vos em breve. Muito obrigado a todos por estarem aqui hoje.